Hi there, welcome back to Save with Crypto. My name is Save with Crypto. Okay, so I just want to talk about different time frames, and I'm talking about this on tradingview.com. If you're not using tradingview.com for your charting, I don't really know what you're doing really, because the service is in its basic form is free. I do pay for the pro version, not the highest end, but just the first one you pay for. Now, if you use my link, which is savewithcrypto.org/TV, you'll get to my affiliate link. Now, what that means is if you have an annual subscription, I think you get $30 off, so it's worth doing that. And then what happens every Black Friday in November is there's always an offer where you can get like an enormous amount off, like 40% off. So what I do is I take advantage of that offer and then kind of renew it for another year, and then what you've got left on your current year gets added onto that as well. So it's good, and honestly, once you've paid for it for the year, sort of you don't really notice the expense at all. Anyway, so that's TradingView. Now, the indicators I'm going to talk about today are the ones I've been talking about for a few weeks now. These are these EMAs, the cyan, the yellow, and the green. That's 9, 21 and 55 EMAs. If you want to know how to set this up, it's a free indicator, and I've made a video which I'll link to at the end of this video, which tells you how to set it all up. And there's also another video there linked which shows you how I use that to identify bottoms of a trend, and in fact you can actually use that to identify tops of a trend as well for taking profit, etc. You just turn everything upside down, and then that's it. So what used to really confuse me was, people would say, well, on the daily time frame we're bullish, and on the hourly time frame we're bearish, which never seemed to make sense to me. Since I've been using this indicator, it's actually started to make a lot more sense to me. So generally what we're looking for here is, in an uptrend, these lines will go green, yellow, cyan, right? Then in a downtrend, like over here, these lines will go cyan, yellow, green, okay? That is when the actual trend is in motion, when the trend is happening, okay? Now when you get reversals, what usually happens is the cyan moves first, because that's the shortest time, that's the 9 EMA. You'll see that move, say for example here. So that will cross over the yellow, which is the 21, and then it'll cross over the 55. And then you'll see, this is the most important part, the 21, the yellow, cross over the green, which is the 55. And that normally signifies quite a strong impulse to the upside, and then the opposite, for example, here, signifies a strong trend to the downside. Now this is only the 5-minute time frame, so what you're seeing is these lines crossing over multiple times each day. So although you're actually seeing a sort of, a bullish trend here, a bearish trend there, a bullish, but it doesn't really matter that much because the trend is changing all throughout the day. If you go to a higher time frame, like say the 1 hour, come down here, you can see here that this doesn't change so often. So for example, let's go back to the 25th of July, so about here. So there you got the yellow crossing the green there, okay? That didn't cross back until the 30th of July, and then that stayed like that all the way down to the 7th of August, when it tried to get above, failed, came back down a little bit further, and now it's trying to get above there again, okay? So you think, okay, is this a bottom here? Because the trend here is clearly bearish, but it seems to be turning bullish. But you go to a higher time frame still, like the 2 hour, you can see here that the yellow hasn't crossed the green, but it's starting to head that way, and even more importantly, the cyan is now above the yellow, so it does sort of signify the fact that this trend here might be changing. But then if you zoom out even further, let's go right out to say like the 12-hour time frame. You can see here that clearly at the moment we're still in a downtrend, because the cyan is at the bottom, the yellow is in the middle, and the green is at the top. So that signifies there's a trend in motion to the downside, even though at the moment we are looking for something in the midterm a bit more bullish. Is this starting to make sense? Because it's literally to do with the fact that, you know, price doesn't go up in straight lines, and it doesn't go up sort of smoothly. You know, what it does, it kind of goes up like that, you know, and then it comes down sort of, you know, like that as well, you know. So at no point in time is it constantly falling or constantly rising. It goes up and down in the process of doing that. Okay. So like when a friend of mine contacted me this morning saying, like, I've just seen the yellow cross the green on the hourly time frame, which it did this morning at 6 o'clock in the morning. Is that a good time to go long? Well, in the short term, yes. In the long term, I don't know, because in the 12-hour time frame, we're still bearish, but that could change. Okay, so it's difficult, isn't it? But a good thing here would have been to maybe look here on the 1 hour time frame. Look here, the cyan coming down quite sharply, and then going back up. And was that Monday? Yeah, it was Monday. And you know, that would have been probably a good sign that the yellow and green were going to cross over soon. But in fact, they didn't do it until the Wednesday. And even when they'd done that, it crossed back down. Only this morning did they cross back up. So like any indicator, it's going to give you an idea of the probability. It's not going to give you a 100% indication of the direction. So it's a probability that the price might go up. Now, the way I tend to play this is, what I do is, if I see a bullish sign on a smaller time frame, usually like the 15-minute or even, I mean, sometimes the 5, but more often the 15-minute or 30-minute time frame, I see something and I think, okay, that looks like the price is going to go up. I would tend to say go long, but I wouldn't use all my capital. And then when I see a kind of confirmation of them two EMAs, the 21 and the 55, crossing on a higher time frame like the hourly or the 4 hourly, or ideally the 12 hourly or even daily, when I see that, I will think about adding more into that trade. Now obviously when you do that, it pushes up your kind of entry price. So at the moment mine's not brilliant. It's at entry at 56,482. The price is currently 57,363. So that means this is currently $68 in profit, about nearly 8% in profit, which is okay. What I've done, because at the moment I'm on holiday, I don't really want to be looking at the screens all the time, is I've actually set a stop loss slightly above the entry. Now what I've done here, I've actually set it for like to only take half the money out of the trade. That's because I think overall, I think the price is going to go up in the next few days. But if it doesn't, then I want to have some capital to play with. So if the price comes down, you know, I will have half the capital back to re-enter or do whatever I want with it, you know, increase the margin, maybe that kind of thing. But generally it means I've got more dry powder to play with. So that's what I'm doing there. You can set the partial stop loss by using this thing here, or if you want to set a full position stop loss, you can use this one here. But what I'm trying to do is get as good an entry as possible. So if, for example, the price decided to do a Bart Simpson, sort of go up there, do this kind of thing, then come back down like Bart Simpson's head. If it was back down here, I would still have dry powder to add to the position. As my liquidation price is at 45.2, that wouldn't worry me at all. But that would be a worst case scenario. Generally what I'd be looking for is a continuation to the upside. And to be honest, if I go out this afternoon and I'm away from the charts, I will probably change the stop loss to one that closes the full position, just in case it comes down. But what you're always trying to avoid is these kind of spikes that sort of just come down and go straight back up again. But if that happens in this case, I'll be trading with half the capital that I am now, but I'll still be in a trade. So that's the risk I'm taking there. Now, if you want to do this, the same as what I'm doing here, I mean, I'm only trading with, what is it now? I think it's a less than $1,000 worth of Bitcoin. I'm doing that at 5x leverage, so it looks like I'm trading with 4,471. So not a ginormous amount. So if you want to do that as well, you can use Bitget, which is the exchange I'm using, which is okay in the UK, by the way. You have to do KYC, but I did KYC with my UK passport, and that was fine. If you want to use Bybit, I've got a link for that as well. If you go to savewith.crypto.org/Bitget for Bitget and /Bybit for Bybit, both of those exchanges give you up to a $30,000 trading bonus, depending on the deposit you make and the amount of trading volume. If you don't use my links, you don't get a bonus anything like that. With Bitget, you only get a sixth of that amount, and I think with Bybit, you don't get anything. So it does make sense to do so. And you can find all those links in the description down below. And I've also included some other exchanges like Blofin and Phemex that I use occasionally as well. Anyway, so if you want to use that link for Bitget, it is savewithcrypto.org/Bitget, and you'll land at this page here. You can tell it's mine because it says Save with Crypto there, and it's got the 30,000 USDT deposit bonus there. And you can see you get these other bonuses as well. Like, so if you deposit like 3,000, you get $150. If you deposit like 15,000, you get 700, etc., all the way up to like 30,000. Obviously, that's for like whales, isn't it? There are other advantages as well. Like I think you get cheaper fees, that kind of thing. But yeah, just join up here. As I say, it's okay for the UK. The referral code is HICP if you need it, but you should be okay. That should be in there already when you get to that page. If you don't want to do KYC, you can use Blofin. So that's savewithcrypto.org/Blofin. They have no plans to introduce KYC until at least 2025. So, you know, if you want to be fairly anonymous with your crypto, that's the way to do it, okay? All right, so I'll say goodbye for now. I'm going to go out and do things. So thank you very much for watching. Please do like the video. Make sure you subscribe to the channel and you've got notifications set on all. Leave a nice comment, and above all, tell your friends.